Joe Biden has run up record trade deficits, also known as losses, higher than any president in history by far. These gaping wounds are costing our country countless jobs and trillions of dollars in wealth. One of my top economic priorities will be to stem this bleeding and put American workers on a level playing field. It's about time. And I must say, I did it 3 years ago, and they were doing great. But that's been blown out the window by the Biden administration.
Today's headline is a shocker. The Federal Reserve has just cancelled the anticipated interest rate cuts for 2025. This decision has sent global equity markets into a tailspin. Major indices like the S&P 500, Dow Jones and Nasdaq have all plummeted by up to 3%. Even the Indian markets, with Sensex and Nifty 50, are feeling the heat, dropping over 1% each. So what's next? First, let's talk about the short-term implications. The Fed's move has created a whirlwind of uncertainty, causing investors to panic sell. Sectors that rely heavily on borrowing, such as real estate and construction, are taking a hard hit. In India, Nifty IT, Nifty Metal and Nifty PSU Bank have seen sharp declines too. Now, let's discuss the bigger picture. Could this lead to a recession? Higher interest rates generally mean higher borrowing costs for businesses and consumers, potentially slowing down economic growth. With existing challenges like geopolitical tensions and supply chain issues, the global economy could face tough times ahead. The World Economic Forum and JP Morgan are already waving red flags. So, what should investors do? Diversification is key. Spread your investments across different asset classes and geographies. Focus on quality stocks with strong fundamentals. Consider holding some cash to take advantage of buying opportunities in this volatile market. Defensive sectors like utilities and consumer staples can offer some stability. Central banks around the world are likely to respond. To fight inflation and stabilize their currencies, some may raise interest rates, tightening financial conditions globally. The Bank for International Settlements has warned about financial stability risks in such an environment. African nations, in particular, are vulnerable. With their reliance on dollar-denominated debt and imports, a stronger US dollar and higher interest rates could spell trouble. The World Bank and International Monetary Fund are already concerned about the region's triple crisis of climate change, debt, and development. In conclusion, the Fed's decision to cancel 2025 rate cuts is a game changer. Equity markets are shaky, vulnerable sectors are on edge, and recession risks are real. But with the right strategies and a keen eye on central bank actions, you can navigate these turbulent times. This is Africa Social Intellect, your premier destination for thought-provoking discussions and insightful perspectives on the vibrant and diverse African community and beyond. Our dedication extends beyond conversations. In recognizing the importance of security, we provide essential information to help safeguard vulnerable nations. From navigating local challenges to assisting these vulnerable nations against imperialistic threats, we stand as a beacon of awareness and resilience. If you're on YouTube, don't forget to subscribe, comment, and share our news. If you're watching on Facebook or another platform, follow us and share this reliable news source. We hope you enjoy the news, and thank you for watching, and see you next time.